Hey, just a quick word about the crazy times that we're going through with this pandemic. So this is a look at the last 2 years in the market. As we all know, markets go up, markets go down, markets go up, markets go down. It's just what stock markets do, right? But let me show you exactly what the stock market has done in the last 2 years. I think it's really interesting. It also shows a really big mistake that some people actually made in the market. So the market hit a high back in February of 2020. 29,500. The market had been above 30,000 before, but had never closed above 30,000. So this was the highest close ever in over 100 years in the stock market. So it was nuts, right? So what happened right after February 12th? This little thing called COVID. The world fell apart and the markets went nuts, and all through the month of March there was a sell-off. And we actually got down to this really, really low point in March. And that looks really, really bad, but this is not the half of the story, really. What happens on March 23rd is the market goes all the way down to 18,500. But what happens really on March 23rd that's even worse has to do with those little lines down there at the bottom. By the way, those are not colored green and red because of Christmas or something like that. That actually is showing the volume that's in the market, the volume of trading, okay? Every time that you see a green line, it's money flowing into the market. And every time you see a red line, it's money that's flowing out of the market. So the highest that those lines are in a whole 2-year time period is on that particular day in March 23rd. Like March 23rd is the highest volume trading of any day in the last 2 years. In fact, it's probably one of the highest trading days ever in the stock market. The average volume in the stock market is down below $1 billion. And the volume trading that day was 4.10 billion. So we had really, really, really high trading on that particular day, and it was going the wrong direction. Money was leaving the market when it was at its absolute lowest point. That's the kind of mistake that I'm trying to help you to avoid. Because if you actually step back and look at this, by the end of the year, the market was back up over 30,000. In the end of first quarter, it was over 32,000. At the end of second quarter, it was over 34,000. Even when it dipped slightly at the end of third quarter down to 33,800, it had already recovered in October. In November, it had already recovered back up over 35,000. And here we are at the end of the year, and it's over 35,000. So that's what the market actually did last year. And we say, hey, it was a huge drop, like over 35%. That's not a good thing. Okay, it is a historic drop. But the bigger thing is the volume of trading that happened when it was at its low point was catastrophic. So what did we learn from this 2-year market cycle? Well, we learned, and we knew this, that markets rise, markets fall. That always happens. Making changes when the markets fall is dangerous. It's a very, very costly mistake. And we also know this, self-directing is really, really, really dangerous. There's a couple of reasons why it's dangerous, but the biggest reason is our emotions get involved when it's our own money. So I don't know when I go through this, when I talk about this market cycle the last 2 years, what your emotions are. The reason I have an emotive up there is because it invokes emotions when the markets are doing something. So what does that story tell you? What emotions do you have when you look at what that crazy market cycle was? Are you happy about it? Or maybe you're sad? Or maybe you're angry? Or maybe you're just confused? What I will tell you is the way most people experience this is most people look at this and they're actually encouraged. Now, why would you be encouraged about the market going down in March of last year? That was a really crazy drop off, right? Here's why a lot of people are encouraged, and here's why I'm encouraged. If the market was able to recover within the same calendar year during a worldwide pandemic, that's not a normal event. The market, it might be down next week, it might be down next month. I'm not worried now because we saw something unprecedented last year and the markets had still recovered within a 1-year time period. So I really would encourage you to step back, breathe, not over manage this or micromanage this, and really let the professionals do their job. What questions do you have about your retirement account? Here's how you can reach out to me. You can email us directly. Email me directly, troy@phdfirm.com. Contact our offices, 844-PHD 401k. I understand your situation may be unique, so I'm available to actually help you with personal advice about your plan. This is not advice about your plan. This is not tax advice, financial advice, or legal advice, but reach out to me. We can set up a time to visit with you about your plan. I'd love to get resources in your hand, whether it's my first book, Refurbishment, or my second book, 401k Architecture. I'm here to actually help you finish well.